Hello everybody. In the current affairs this week, the week ended 12th of January 2024. This week saw sharp cuts in the Indian stock market. At the benchmark level, Nifty 50 was down by more than 2%, Nifty Mid Cap was down by more than 5%, and Nifty Small Cap was down by more than 6%. But individual stocks and individual stock portfolios suffered very significantly across large, mid, small segment. FIIs continued to be sellers to the extent of more than 16,000 crores, and DIIs, like always, continued to be buyers to the extent of more than 21,000 crores. We really wonder that if the domestic flows would not have been supporting the Indian stock market, what would be the fate of the Indian stock market? Nifty Realty and Nifty PSU banks, both these sectoral indices were down by more than 8%. Nasdaq and S&P 500 also were down by around 2% each. But when it comes to a 1 year performance of the various stock markets, Nifty 50 in last 1 year is up by 10%, mid cap is up by 17%, and small cap is up by 18%. While as Nasdaq is up by 29% and S&P 500 is up by 24%. And to add to the returns of the US stock market, for somebody investing from India in the US, the US dollar has appreciated vis-a-vis the Indian rupee by 3.78% in last 1 year. The 10-year GSEC yield in India has risen from 6.78% to 6.88%. This is important at the times when everybody has been talking about rate cuts, while as there has been an increase in the 10-year GSEC yield. The reason why the stock market is down is one could be attributed to the FII selling, but more on account of the fact that the Indian economy in last quarter and little more is slowing down. Consumption is slowing down, and there is a stress in the loans granted to small businesses and small borrowers. The corporate revenue and the corporate profitability is in most of the companies or several of the companies is not even matching the nominal growth of the Indian economy. The investment by the private sector is slow, and the economy is quite dependent upon investments by the public enterprises and the government. One of the story related to private sector capex has been this week that unlisted companies have been investing in fixed asset and creating capacities more than the companies which are listed on the stock exchanges. And this speaks of why the Indian stock market is not welcoming these kinds of trends. Let us hope that in some time to come, on account of certain policy measures and the structural changes which would happen in the Indian economy, this trend reverses. Now let me talk about a company, a global company, which is doing fantastically well and getting the advantage of the new age happenings in the world of technology. I want to talk about the Taiwan Semiconductor Manufacturing Company. This company is the largest manufacturer of advanced semiconductor chips which are used for artificial intelligence, and they are the biggest beneficiaries of this trend of artificial intelligence. Their revenues for the quarter ended December 2024 were up by 39%. So this is the kind of change and the kind of growth that is happening in sectors and companies which are futuristic in nature. That is all for this week. Thank you.